this video, let's talk about the volume oscillator. Unlike the classical volume, this one is oscillator which compares the shorter term cycles and longer term cycles volume averages and gives us, the traders, a read. Either the volume is increasing or fading out of the market. So where do we find the indicator? How do we use that? Under the indicator section, you go to the volume and you would find here the volume oscillator. In the shorter term, we have a period of 9 and the longer term period of 21 bars, where it actually calculates the averages of the volumes. You can choose the style and the thickness of the lines as well as the visibility and add the levels. I add 0 because it's important level for the read of the indicator. The idea here is very simple. The indicator, the way it is designed and the way it calculates the average of the moving average in the longer, broader cycle and the shorter cycle, allows us to understand either there is an increasing momentum and for example, opportunity to verify breakouts, or if it's decreasing volume and the breakouts could actually be fake. So read above the 0 line, like in that cases, for example, indicates that there is momentum coming in, the volumes are in, the buyers or the sellers stepping in the market with increased volumes, right? Again, once again, difference between the cycles on the shorter term averages and longer term averages, and that gives, as you can see here, all these spikes a very increased momentum, and to understand either the buyers take the control or sellers take the control with increased momentum. My favorite way to use that is after fake outs. For example, look what happens in that place right here when this low is fake, creating a fake spike below the low, and then this candle, the green candle, right, which sort of a inner range, is broken to the upside. And now look what happens here. Buyers are taking control with the increased momentum that gives a very high probability of a strong move. When it comes to the sellers, look for fake outs on the peak. Look what happens here. Fake spike over this peak, and then the break below this low happens to be where? Boom, with increased momentum. That's a very strong sign after the momentum was pretty weak, as you can see at the bottom, pretty weak, pretty small, and then you got a fake out, and then boom, the momentum increases, brings back the sellers, and gives a high probability for a strong move.